Hello! Today, I think, is Tuesday, the 15th of July in 2025. I'm Jason Shapiro, trying to see what we can see here. So the first thing I would say was today was not a good day. The two main drivers, and I know we talk about this a lot, but to me, the two main drivers of this bull market, and of everything for that matter, are the AI thing and the liquidity thing. Well, last night we had very positive news on the AI thing, and that, that they were going to allow Nvidia to sell to China, which should be very good for Nvidia and therefore the rest of chips and therefore the whole AI thing. And it was good for Nvidia. Nvidia did go up today. And the chips, for the most part, did go up today. But you could see this is where that news popped out, right? Then it tried to retrace it, and then it went up to new highs over the course of the day by the morning when we opened. But it gave it all back. The Nasdaq closed down on the day today. And this was with pretty benign CPI as well, so you can't blame that either, okay? So that's not good, right? All the other indices got destroyed. Even the Russell, where people are the most short, was the worst. They got destroyed. The markets traded, in my view, horribly today. Okay? Which is the first time I've said that in quite a while. So with the Nasdaq being so crowded long here at our max crowded levels, and this being a news failure day, I could get short the Nasdaq today versus today's high. I'm already long the S&Ps. So I have to choose. And I can't get into it on this forum because of my regulatory responsibilities. But I would have to choose between keeping long the S&P and getting short the Nasdaq against it, or just getting out of my S&Ps and making things a hell of a lot easier. You could probably guess which one I'm going to do, but I'll leave it to you. So those were stocks. They were very bad, right? Bonds were very bad, right? There was a pretty decent CPI number today. It was pretty benign, in particular that people were very worried about it with the tariffs and all that, and that was here, and we see it popped up, and we never saw those highs again. It went straight down after that. Weak, and bonds across the world are weak, and I guess that's partially why stocks are getting to get hit, because we're getting to the point now where people are getting worried about the global bond market. Japan, Europe, US, these bonds are getting hit, right? And that's also a bad sign, obviously, for the liquidity idea, right? 10 years hit, 5 years hit, 2 years hit. And I've talked much about how people are ramping into this the steepener trade because it seems so obvious and therefore offers some risk in my view. So not good. Also not good, the metals. Where's the liquidity here, folks? Where's all our lovely liquidity? Gold was down. Silver was down for a second day after really having this breakout type of thing. It's now testing that breakout. Platinum down for another day. Palladium kind of flat after a bad down day yesterday. Copper, nowhere. The liquidity trade did not work today. Bitcoin, you want to talk about the liquidity trade? Bitcoin was all the way up here yesterday, 124,000. It's now 116,000 and change. It's a pretty big drop in a day. In the world is flush with liquidity, and I will talk about it again. The funny thing about liquidity, which I talked a lot about on the Sunday night call and in the report this week, but funny thing about liquidity, just when you think that the world is full of it, sometimes it just goes away quickly. I can specifically remember in the summer of 08 when liquidity was flush, and by October of 08 there wasn't any liquidity anywhere in the world. I'm not saying that's going to happen again here, but I'm saying that's the funny thing with liquidity is you think it's there, and then all of a sudden it's not. It's clearly in the bond market is disappearing. And now in the metals, 2 days is not going to make a trend, but they are definitely starting to come off. And with that, The dollar, again, bid again. You can see Swiss down a lot, euro down quite a bit, and that was on the back of a strong euro, some strong euro numbers last night as well. You could call that a news failure as well. This was the CPI, but this was a strong euro number around here. Euro went up, was trying to sell off. CPI came out a little weaker, which is negative dollar. Euro went up and totally failed. So there's a change afoot. Yen continues to be bad. It's been bad for a while now, and continues to be the leader on the way down here. It's funny. People that were bearish the stock market always like to point to, oh, well, there's going to be this reverse carry trade. The yen's going to go up and the stock market's going to go down. Well, the stock market went down today and the yen closed on lows, right? And a new low for this move, right? Let's not forget, this is rolled contracts here. So, you know, if you're looking at just the current contract, it's more like down here somewhere. And they all got killed. You know, Canada was down, pound was down, Aussie was down. So, you know, it's a little bit of a change here, you know, between these liquidity markets like Bitcoin, the metals getting hit, the bonds getting hit on what was a benign CPI number. And the stock market really was just piss poor today. You know, it was pretty piss poor the entire day, but the Nasdaq was holding up. And then in the end, the Nasdaq just got crushed and closed on lows. It's a huge reversal day on a bullish piece of news. There's no reason why the Nasdaq should have been down today. And it was. So again, does that mean that that's it? It's over? I don't know. But it certainly is a change in market tone here. And we've already sort of pointed out in the last week or two the change in sentiment that's gone on. Now we're getting a change in market tone, and we have max long positioning in Nasdaq when the Nasdaq really should be the market leader. So it's dangerous here. That's what I say. Dangerous. Danger, Will Robinson. So that's pretty much my thoughts for today. Take it as you will. And hopefully everyone's doing all right out there. And we will talk again soon. Please like the video if you like it. Questions, comments, always welcome. And we'll talk again tomorrow. Thank you.
Hi, I just wanted to say, if you like these daily videos, we do them 4 days a week, Monday through Thursday, for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.